Hey traders, Akil Stokes here with Tier 1 Trading, and welcome back to another Trading Edge video. Today we're going to look at 3 trading opportunities on 2 different pairs. So let's not waste any time and let's get right into the charts. So the last time I spoke to you guys, we were looking at a few trading opportunities on the euro dollar, one of which being a double top. And well, 150 pips later, we have some very happy traders out there, and it brings me to a good point. Now, I don't know if it's finishing 4th in 2017's most helpful traders on Twitter, but the community has been very active over on Twitter, and there's been a lot of traders in there sharing their glory stories, a lot of traders sharing their struggles as well, and it's just been a very active environment. So if you're over on Twitter, give me a follow at Akil Stokes RTM. Give Jason Greystone a follow as well, J_Greystone, and surround yourself with like-minded individuals. Now we're going to have a much better platform for that in a few weeks or so, but for now, right, get yourself surrounded by people that have the same intentions as you do, and just surround yourself with that positive energy. We'll talk a little bit more about that later, but the past is the past. So the question is, what's next here on the euro dollar? And there are 2 opportunities that are on my radar. One is going to be a counter trend trade. One is going to be a trend continuation trade, both kind of dealing with structure. And we'll start off by showing you my projection. Where do I expect price action to go? We're not going to go through the whole IPDE process. If you've been with me for any time now, you know that's how I operate, the 4-step trading process that I go through. But I want to show you where I think price is likely to go next. And that where is going to be right in here, right? You can see that price action before we made, or I guess during our swing up, we made a little bit of a pause right here where price came down. We consolidated a little bit, created a nice little triangle pattern before breaking to the upside. You can call it a pennant pattern as well, since we have the flagpole attached to it, before breaking up to the upside. This is really the last new structure high, the last outside return. This is the last area in which price action found a little trouble at, and this is the next area in which I think price action can find trouble breaking through again. So talking about the sellers here. And I like this level for a few reasons. Not only is it that natural kill zone based on how I draw out those kill zones, but if we look left at this level, right, we just zoom out a little bit. And let's just actually go to a daily chart here. Maybe that'll give us a better picture, right? If we just take a look at this level, this is a place where we have a very nice structure swap. Now, I don't have a better word. I know that sounds a little bit corny, but essentially a structure swap is a place where support has turned into resistance, resistance has turned into support, an area in the market, a price point in the market where the buyers and sellers have both battled and protected in the past. And you can see not only do we have that consolidation right here, but if we start drawing some arrows in, right, this same line was resistance at some point earlier, right? You can see price action coming down and spiking up and touching this level of resistance. You can see price action consolidating on this level here. We also look left, we had resistance, 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 and then before that, that same level of resistance was also support, support, before acting, or I guess after acting as resistance earlier. So long story short, right, it's a level where price has reacted multiple times in the past as both previous structure support and previous structure resistance. So my expectation would be that if price action can come down to that level, there's a good chance that we can see the buyers try to protect that level. It's also a good chance that the sellers are probably aiming at that level as a place for profit taking as well, giving us a lot of buy orders flooding into the market, potentially seeing a retracement. So if you are looking to be a buyer here on the euro dollar, this zone, I'll draw this out for you, this zone between 119, let's call it 119.50, 119.55, and about 118.15 is going to be your potential reversal zone, your kill zone, the area in which you would look to get long. Now, another opportunity is going to be what's called a 2618 trade. And this is an opportunity that comes after a double top. So if you're a more conservative trader, or if you're someone that just missed the double top and you're looking for a next reason, another reason to get involved, you would look for the 2618 opportunity. Essentially, what a 2618 is this. What it means is this. Sorry, I'm been recording all day, so I'm running out of words here. But you would look for a retracement back into our double top, right? Not only to this little V point right here, but you could bring on a Fibonacci retracement as well, right? Swing high to swing low, and then look for the 618 Fibonacci retracement level as that confirmation point. So there's a few ways you can enter it. You could be aggressive and enter right on the 618, or like we did below, you can create a kill zone, meaning an area in which you think price is likely to reverse. And then if price action makes it to that area, then you look for an entry reason, so a way to get involved. So if you're looking to get short, look for the retracement. We may see one. Our RSI is already oversold here on the 4-hour chart, and looks like the move is starting to run out of steam. We're seeing a little doji candle here, and we currently have a bullish candle forming. So especially if we get a higher high, higher close, there may be a good chance that we get a retracement back up to this level. Or if we continue down, right, and continue to press on that oversold level of the RSI, I would certainly look for a reversal in this level and a potential move higher back into that same zone, right? Back up into this $1.20, this 120 level. Now, we're going to have a similar opportunity on the euro yen, and where the euro dollar was an opportunity that was kind of, hey, you know, wait and see. The euro yen is, well, it's basically at market. Now you can see here on the euro yen that price has recently broken out of an area of consolidation, right? Price has gone sideways here. I remember watching this boring junk towards the end of the year. Price has gone sideways here, and then we finally broke out of this zone, giving us a higher high. Well, one of the ways that I teach trading breakouts is wait for the retest. So get your confirmed breakout and then wait for the retest of structure, and that's exactly what we are setting up here. And if we look closely, we actually have a nice little zone right down here. It'll be easier seen when we go down to the lower time frames, but a nice little zone right down here where we can look for buying opportunities and the opportunity to trade this back up to retest previous structure highs, and then even trade for an extension as well. So once again, going down to the lower time frame, going down to the 4-hour chart, we can see that price has entered our kill zone, right? Our kill zone was a little bit bigger than this. Technically, it started up here, but you can see we're well into that. But price has entered this lower level of our kill zone, putting us really close to structure support, previous structure support, which is a good thing. Our RSI, the relative strength index, is also oversold. Now, oversold isn't a say-all, be-all for knowing that price is going to reverse. Please don't do this. I did a training lesson yesterday teaching the RSI, and I had to repeat it about 4 or 5 times. Just because the RSI goes oversold or overbought, do not buy or sell. Just because the RSI goes oversold or overbought, do not buy or sell. That is not what the indicator means, right? The indicator is a momentum indicator. It just shows us the strength of momentum. Now, what goes up eventually must come down. What goes down eventually must come up. So we can certainly use it as a clue on when to project potential reversals. But do yourself a favor, right? Look at your price chart. Look at areas where the RSI goes overbought and oversold, and see how many times it continues to rally in that direction without reversing right away. And hopefully that can be a little training lesson for you that can help save you some money for you guys that are, ignoring the rest of this video and just saying, Akil said RSI oversold, buy, right? Don't do it. Don't do it. But anyway, we're back in this zone. So we've already put in a doji candle. So this is a loss of momentum candle. You can see we have some pretty big red candles shooting downwards. These are going to be high momentum bearish candles. We followed it up with a nice doji candle, which is an indecision candle. And essentially the story that the market tells me there is that the market is like this fast moving train. It's moving, it's moving, it's moving, and sellers are pushing it lower, pushing it lower, pushing it lower. Then we get the doji candle and it's a pause. Now, that pause doesn't necessarily mean a reversal, but it is a sign that the momentum has come to a halt. And one of two things can happen. We can either continue pushing downwards and break through this level, kind of like what we've seen right here, where we're at a similar pause and then the bearish trend continued. Or we can start to put in a reversal, right? The market could run out of steam. We can see, again, sellers start to take profits. We can see new buyers start to get involved. And we could see a potential reversal back up this way in the direction of our underlying trend. And that's what I would be looking for. And what's cool about this scenario is, right, depending on where you get involved at, right, the risk reward is going to be fantastic, right? Even if you're getting involved, let's say right up here, right? We know that our risk just has to be below this level of support, where our potential reward, right, at minimum could be a retest of previous structure highs. And even not counting or not even considering extended targets, we're getting about almost a 2.5 to 1 risk reward, which is pretty darn decent. So those are 2 trading opportunities for you. And before I leave you, I want to share with you an article, right? I read this article this morning. Let me see if I can bring it up. It's over on my Facebook page. And I posted an article to my Facebook page this morning called 8 Tips to Help You Become More Resilient. And I love this topic because this topic basically sums up trading, right? Trading is about being resilient. It's about sticking to your plan, sticking to your strategy, and trading through the good times and the bad times. We all know what a drawdown is, or if you don't, it's an area where you just can't get right. It's an area where you lose, and it seems like the world is ending. And the only way to get through it is to be resilient, is keep taking right actions, keep doing the right thing. And I remember last year, right, we're off to a good start this trading year, but last year was a disastrous start. If you guys have been with me, you knew that I spent the first 6 weeks just getting my head bashed in by the markets. And, you know, it hurt. It was painful. Now, I've been through it before. I've been trading for a good while now, so I'm used to the drawdown. But you had many newer traders that were starting to freak out. You also had a lot of the trolls comment in and say, oh, this guy's horrible. He doesn't know what he's talking about. And what did I tell you guys at the beginning of the year? Stick with it. Trust yourself. Trust your plan. Trust yourself. Trust your plan. Stick with it. Be resilient. Just keep hammering. Keep hammering. No drawdown lasts forever, especially if unless you're sabotaging your trading, then it can't. And even then, I suppose you go broke, and I guess the drawdown ends technically. But anyway, you keep doing what you're supposed to do, and you'll fight your way out of it. And it's very important to know that as a trader. And I know many of you are getting off to a very hot start, but guess what? A drawdown will come. There will be a time where your equity curve starts to slope downwards. And the real true test of a trader is, what are you going to do during that moment? Anybody can win. It's easy to win. Trust me, the winning is easy, right? Where people get destroyed is when they lose. They start ditching their system and trying something else and sabotaging and forcing and missing out and all the stuff that causes us to go broke, right? And you just have to be resilient. And the couple of tips that stood out to me were number 3, and number 5. Number 3 says, don't wait for the situation to fix itself. I mean, you have to take action. If you're a trader and you're doing something wrong, right, it's just not going to magically get right, right? You have to do something to correct yourself. You have to do something to take that ship and steer it in the opposite direction. You have to take action. And number 5 is, don't try to do it alone, right? You are not alone out here as traders. If you've been a part of our community on Twitter, Facebook, here on YouTube, and of course soon to be the Tier 1 trading site, you're going to see that there are a lot of other traders in the same situation as you. And you know, in good times, it's good to have people you can kind of boast to and have a little, hey, I made 50 pips today. I made 75. You got me, George. Good job. It's good for morale that way. And in bad times, misery loves company. Because when you're on a losing streak and you see that, hey, there's 10 other traders that took the same trade as you or are in the same drawdown as you and they're feeling bad too, right? I know it doesn't seem like a positive, but it helps you out because now the thoughts of, is it me? Am I just not good enough? Those are eliminated from your mind. You know it's, hey, the market's just in a bad streak. It's not me personally. And it's easier when you surround yourself with those positive thinking people, those positive vibes to keep doing the right thing. And I truly believe, right? Once you learn how to do the right thing, if you just do the right thing, you will be successful. But it starts by getting on that path. So, whew, I'm fired up. We had a good meeting this morning. The site is coming along very, very good. We're very close to our new launch. And there's just been so many great reviews, so many good comments of traders saying, hey, we support you. We can't wait for the Tier 1 trading launch. And I'm just in a good mood, guys. So I hope you enjoyed this video. If you liked it, hit that like button. That helps me out a lot. Leave a comment. As always, I love the conversation. Our trading community loves the conversation as well. And do me a favor, share this on social media, Facebook, Twitter, Google+, if I post it on Instagram, wherever you can find it at, share it. Let's spread the word. Let's build the best damn trading community in the world, and let's all find success together in 2018. That's my challenge to you. So if you can do that, I'll be back later this week. And until then, plan your trade, trade your plan. You take care, guys.